Ladies and gentlemen, following Tesla's strong close on Friday, the stock was up 1.71% to end out the trading day. Well, we headed into Thanksgiving today. Happy Thanksgiving. I hope you all enjoy it. But tomorrow we have a half day of trading. So in today's episode, we are going to be going over the news that you need to know today for Tesla, because there is some news. We're going to be looking at my thoughts around tomorrow and what starts tomorrow. Now, I also want to share with you what Tom Lee recently said yesterday on CNBC about this market. I actually shared this in the last video, but I want to make sure we all see this, because I know there's a lot of people right now that are bearish, and I think people need to have that bullish perspective as well. Tom Lee said some crazy bullish things, like you're looking at an over 5% rally in the S&P by year end. He said Bitcoin is likely to reach new all-time highs by year end, which would be upside from here of 38%. If that's true and that happens, Tesla stock is going to be well into the 500s. Like, no questions about that. So, do me a quick favor before we get into all of this information. This video is going to be on the shorter side. Hit that like button as well as subscribe to the channel. Check that link out down below in the description of today's episode if you guys want to come join the trading community. Come invest alongside us. We're basically stealing stocks at this point in terms of valuations because of how scared this market has been. Okay? It's one hell of an opportunity out there. But again, I'm not a financial advisor, not a financial planner. You need to make your own conclusions, come to your own opinions, and ultimately own what you invest. Make sure you understand what you are investing, to say the least. But with that said, let's get started. First and foremost, today is Thanksgiving, okay? Markets are closed. Tomorrow, we're going to have a half day of trading. Okay, gonna have a half day of trading, so there is going to be trading tomorrow, and there's reason to believe that tomorrow could be a pretty good day. First and foremost, you have Bitcoin today that's doing relatively well. It's at $91,500. The sitting close to a recent high. The recent high was $91,900. So if we can actually break out tonight heading into tomorrow, risk on rally is here. And we're going to talk about this in the next video more in depth. But basically, people are investing right now for two reasons. Either a year-end chase to get the performance up from, let's say the S&P's up 15%, and you're a hedge fund, you're up 9%, okay? No matter what 2026 looks like, hypothetically, you're more than likely going to see a chase from a lot of this market because they don't want to end the year underperforming the S&P by so much, okay? So that's number one. But number two, a lot of people are going to position for 2026, and 2026 looks like it's going to be a good year. Now, we don't have much in terms of news today. We do have some Russia headlines. Russia calls Ukrainian leadership illegitimate. It says some people demand to keep on fighting until last Ukrainian dies. Russia is ready for that. Yeah, he says Russia wants to agree with Ukraine eventually. Putin says that there's no use to sign any documents with the Ukrainian leadership. But he says Moscow is ready for serious talks, basically saying that Ukraine has not been serious this whole time. That doesn't really move the markets at this point. People really don't care about that at this point. Markets are long over the whole Russia-Ukraine war. But if it does end, that it can be a positive catalyst just to die down tensions a bit. But besides that, you really don't have much in terms of, news today that's going to move the markets heading into tomorrow. You don't have any real economic data either tomorrow. that is going to, move the markets. Okay, we're looking here at the trading, the economic calendar on trading economics, and there's really nothing for tomorrow. You do get some GDP numbers out of Canada. Canada and the US tend to kind of go hand in hand as far as economic activity. So does that move markets? Maybe, probably not. But if we get any headlines tonight into tomorrow, that could move the markets. Talked about before, among the many other reasons why markets are likely to move higher into the end of this year, possibly starting tomorrow, the CNN Fear and Greed Index is sitting at 18. It was a week ago at 7. People are just very bearish still. People are convinced with their, predictions and their expectations. And the fact of the matter is, we're going to be getting a rate cut in December. Probably a couple of cuts next year. AI is alive and well. Consumer is going to recover. And this is all going to be good for earnings season. I don't see AI, investments slowing down anytime soon. There is one big risk for next year, and we'll talk about that in the next video. But I think that's a risk towards later in the year. Okay, and it has to do with China and AI. Now, if you look at the AI Investor Sentiment Survey, last week you were at 32.6% of investors were bullish. In the reading that came out yesterday, 32% are bullish. So it actually fell a little bit, okay? Neutral investors rose from 23.9% to 25.3%, and bearish investors fell from 43.6% to 42.7%. So you still have a 10% spread of more bearish people than bullish people, even as this market has begun to come back a little bit. I think that's partially because some of the more risk-on areas, Tesla, hypergrowth small caps, right, have not really recovered much from the lows that markets have hit. Even Bitcoin, right? Think Bitcoin. It's recovered a little bit, but the chart, it hasn't been that much recovery. Now, again, Tom Lee says that Bitcoin could hit a new all-time high by the end of this year, and that he's expecting at least a 5% rally from here in the S&P. If those things happen, Tesla's stock is going to do exceptionally well. So take a listen to what Tom Lee said yesterday, because I think you really need to hear this if you have not already.
You had been saying, let's say a few weeks ago that we could get some choppiness in the first part of November, but you were still kind of bullish looking beyond that. What, in your view, has the market been contending with in recent weeks? What did we learn, and how does it set us up for the outlook here?
Yeah, well, I think the market's been struggling with the same things that it's grappled with all year, which is a monetary policy direction that's not completely clear. As you know, the odds of a December cut have really jumped around from as high as 60 down to 30, back to 80. And the second is, of course, policy volatility, because the administration does make proclamations and statements that are sometimes head fakes but confuse investors, and it's all resulted in really suppressed enthusiasm for stocks. Sentiment has been bearish.
And then that, led to a 5+% pullback in the S&P 500. A lot of the more aggressive parts of the market took on a lot more pain than that. Where does it leave us in your mind? I mean, as I mentioned, 4 days, this market has barely even flinched at pretty much all the hurdles that were along the way. The moving averages, we got above last Thursday's high. We know it's kind of an upside bias the Wednesday before Thanksgiving and the Friday after. But beyond that, where do we go?
I think we're set up for a really strong rally into year end. And I know we just came out of a pretty terrible grind. I've talked to a lot of PMs that have said it's one of their worst 6-week periods ever in their career. So we know people have lost money, they've de-risked. But we know into year end we have the positive seasonals, especially given how strong the May to October was. It's really a 5 to 6 chance that we're going to be up 5% into year end.
Right.
The second is monetary policy, I think, is going to shift dovish. Even if Fed Chair Powell is hawkish, we know it waiting in the wings is now a shadow Fed that's dovish. The third is we know sentiment is going to have to chase this rally because 80% of fund managers are trailing their benchmark. And then I think the fundamental story is pretty intact. As we're doing work into next year, and I think earnings visibility is going to be really good. So I don't think I'm questioning if earnings are peaking. It's more just that stocks price in and correct enough.
Now, you've been, I think, pointing toward, let's say, 7,000 in the S&P by year end. Now, that's only like 2.5% up from here. We made some progress. But a year ago, you also thought we'd hit 7,000 in the first half of this year. So what happened along the way? And I guess, what might you think about in terms of impediments looking into 2026?
Yes. I mean, we're almost through this year. And I'd say, looking back, this was 5 years of history compressed into 1 year because we had a major bear market, the biggest tariff hikes ever. And that, of course, killed any hope of any 7,000 in the first half. But miraculously, stocks went into a waterfall decline and recovered every single point of that decline symmetrically. So it really speaks to the resilience. But I guess as we're thinking about next year, I bet you it's going to be very similar in the sense that we'll get a policy shock, maybe whether it's monetary or from the administration. It could lead to a big drawdown of 20% again. Yeah. But it's a replay of this year. And maybe we've now had 20% bear markets in 5 years. I mean, that's a lot of history compressed into a 5-year period. Now,
you mentioned, obviously, the confusion over the path for the Fed as contributing to this recent pullback, as well as some policy flux in there. What role did the violent shakeout in crypto have on all that? Because a week ago, that's all we were talking about was Bitcoin can't stop going down. The NASDAQ wants to follow it, or people are concerned about how that's going to knock other things loose in other financial assets. So it's stabilized, but it's not exactly sort of participating to the upside in this bounce.
Yes. So crypto had been a leading indicator for actually most of the last 5 years. But on October 10th, crypto had what I would call Armageddon, a flash event. But it led to a liquidation that was never seen in the 15 years history of Bitcoin. About a third of the market makers went out of business that day. Almost 2 million accounts went to zero. Yeah. And it was because of a pricing error, what I would call a glitch. It led to what they call auto-deleveraging.
You've definitely made that case that it definitely seems as if there was something in the kind of market maker functioning that got fouled. Yeah. Now, that being said, the reason you can have all those accounts auto-liquidated is because there were that many accounts with that much leverage that got Bitcoin up to where it was, above 120.
Yes.
Right? I mean, so it's not as if it happened in a vacuum.
Yeah. So in a way, it means crypto represents really a very precise measurement of risk appetite because there's so much more leverage. And that got wiped out. Right. That last time it happened in 2022, it took 8 weeks before people sort of touch their toes back in. I think that's where we are. We're near a bottom. But now I don't think crypto leads. Crypto is lagging because it's really the AI that's going to be leading.
Okay, so basically that is kind of sidelined the idea of what, Bitcoin 150,000 you were thinking before?
Well, I think it's still very likely that Bitcoin's going to be above 100,000 before year end, and maybe even above to a new high. So Bitcoin makes its moves in 10 days in every year. I think some of those best days are still going to happen before year end.
And we're watching it right now at 89.5, firming up throughout the day. Tom, stay with me. Let's bring in anything else can participate.
Yeah. Well, I know stocks have been sort of trading pole position, NVIDIA and Alphabet. But to me, the bigger story arc remains that AI is a mega trend. There's a lot of resources and spending, and it's a big contributor to growth. And we know there's a shortage of both power and silicon. So I do think it's going to ultimately move in the next 12 months kind of as one cohort. I don't think valuation sensitivity is as important as people think. We're actually studying this now. We're going to be publishing it soon. But if you look back 10 years ago, the most expensive stocks at the end of 2015 continued to be the best stocks over the next 5 years.
Right. Yeah, I mean, it's interesting because I don't even know if it's really a valuation story in terms of what's taken a step back. It's a matter of, kind of who's got the current lead.
Whose model
or the
works
clearest
better.
path or something like that. Yeah. Cameron, in terms of the macro, I mean, everyone has been able to say, okay, we had this rhetorical dovish pivot from Fed members. We can now price in a cut. You mentioned that it looks like we have a glide path toward 3% in short-term rates. Are those still going to be insurance cuts? Are those still going to be like the economy doesn't really need it, but we could use it because, we just had the Beige Book come out, an hour or so ago, and there was a lot of commentary about softness in labor markets and companies finding ways to do more with fewer people.
Yeah, that is the biggest question, because cutting because you can is a very different story for risk assets than cutting because you should. If the context of the cuts is because the labor market needs the support, that the economy needs the support, what you would see within things like equities or credit is a lot of weakness, because equity valuations would be too high and earnings estimates would be too high. But if you're cutting because you're just trying to get to neutral because you don't want to be too tight in the future, that's when equities can very much rally and enjoy it. Now, the Beige Book has been painting a very sour picture about the economy for quite some time, as has all soft data been painting a much more sour picture about the economy. So we continue to go back to this notion of what is the equity market telling us about things like the U.S. consumer. Equal weight discretionary versus staples is still in an uptrend. So to us, the equity market is still arguing that the aggregate consumer, of course, with big weights to high-income consumers, is still in a fairly good position. So we'll continue to monitor that for any kind of change.
Yeah. I do think that the outright inability of staples companies to actually perform is helping that. But you're right. In a real recessionary...
Now, in Tesla stock-specific news today, this is pretty big. It says, starting last night, Tesla is launching a free 30-day trial of FSD supervised V14 in North America for the estimated 1.5 million Tesla owners with hardware 4 who have not purchased FSD. Owners will receive an email and in-app notification about the trial. The total cumulative miles driven on FSD by Tesla fleet is about to skyrocket. So yes, this is good for training of future models of Tesla. Again, as Elon has said before, like, it's those edge case scenarios that give Tesla the problem, right? I could tell you, like, here in Michigan, right? There's not a lot of Teslas in Michigan, let alone people that use FSD. So in the edge case scenarios here in Michigan, there's not going to be a lot of training data on those edge case scenarios. Getting FSD out there, letting people try it, will get that data that might be missing to help further advance FSD. At the same time, convert, who knows, 5%, 7%, 10% of these trials into subscriptions of FSD, which is high in margin. Estimated 80-90+% net margins to the bottom line. And that could help Tesla's profitability going ahead. Also in the news today, the first international Cybertruck deliveries have officially begun in South Korea. Now, in option activity yesterday, again, it was on the slow side day before Thanksgiving. That's not a big shocker. You had 214 different trades totaling $160 million and a positive order value of 77%. Now, short sellers, they were... looks like covering on short positions a bit yesterday. Looked like about 1.5 million shares were covered on. Short interest now coming in at 3%, which is a recent fall from the 3.3% level we were at. You have about 74.2 million shares sold short. So that's another reason why Tesla likely rallies pretty aggressively into the end of this year. Besides, 2026 looks to be really good. There's going to be a lot of news coming in December about Robotaxi hitting new cities and Optimus next year. Tesla's entering into an AI hyper growth phase. But again, in my opinion, economy looks good next year. AI is alive and well. Inflation likely continues to come down. You're going to get rate cuts, blah, blah, blah. But even in the very near term, there's a lot of shorts still in Tesla, right? 74 million shares. Compare this to November 12th's volume. There was only 58 million shares that traded hands all day in Tesla, right? So what do you think happens if 5 or 10 million shares want to cover into the end of this year? That's going to be some pretty explosive upside on top of the volume inflow that we were likely already going to get. Okay, so let alone a chase. If you want to chase this market and, beat the S&P, one of the best areas to do so will be in Tesla, right? Based on its beta, right? Tesla tends to go up 2 to 3x more than the markets or down 2 to 3x more than the markets. But recently, Tesla did really well during this correction in the markets. Tesla normally would have been down a lot more, but Tesla only fell 19% from its recent highs and is only down 10% from recent highs today. Compare that to Meta, Oracle, other, AI stocks, and Tesla's a massive winner, relatively speaking. So tomorrow, while it could go either way, I would imagine it's going to be a pretty good day because it's after the holiday. Doesn't tend to be a whole lot of selling pressure. There doesn't tend to be a lot of Wall Street in the office the day after Thanksgiving, so the buying pressure might take over. Now, it's not going to be a super high volume day. It's going to be a little on the slower side, but I do think we're going to have a good day tomorrow. So let me know your thoughts on all of this down below in the comment section. Hit the like button as well as subscribe to the channel if you have not done so already. Have a great rest of your day, and I will see you in the next one.